If you look at the ETFs, what you'll see is that the Bitcoin ETFs are crawling up past all the commodities. They're about to eat the gold ETFs, and then they're going to eat the S&P 500 index ETFs.
Do we agree with Michael Saylor that ultimately this category, Bitcoin and other crypto assets, could be bigger than SPY? Yes, we do. Absolutely, we do. And Bitcoin alone is going to be the biggest part of the entire crypto asset ecosystem. Our expectation out in 2030 that it will be a $20 trillion, it will be worth $20 trillion.
Earlier this month, while delivering a powerful keynote address at the Bitcoin Atlantis conference, MicroStrategy founder and executive chairman Michael Saylor predicted that the spot Bitcoin ETFs will quickly surpass the gold ETFs and, just as rapidly, the SPY ETF, which is currently the world's most traded ETF, trading $38.3 billion daily on average. Last month, the ETF, which tracks the S&P 500 stock market index, became the first ETF to reach $500 billion in assets under management. ARK Invest founder, CEO, and CIO Cathie Wood agrees with Saylor that the spot Bitcoin ETFs will easily surpass the giant funds milestones and do it in a shorter time frame. According to Cathie, Bitcoin is on the path to becoming a $20 trillion asset class by 2030 due to several perfectly aligned factors. During a recent interview with the New Zealand Herald, Cathie talks about a really interesting and important aspect of Bitcoin's supply and demand dynamics. Since their launch on January 11th, the 9-spot Bitcoin ETFs and GBTC have bought 796,238.61 Bitcoin, equivalent to more than 4% of Bitcoin's current circulating supply. According to Cathie, there is still so much pent-up demand, with thousands of institutional investors still bidding their time to come aboard. Yet, long-term hodlers are not willing to part with their coins. As a result, Cathie estimates that Bitcoin's price is about to get significantly higher, high enough for some of the long-term hodlers to let go of some of their coins for new buyers like BlackRock and ARK Invest. During her interview with the NZ Herald, Cathie also discusses the impact of the coming halving event on the cryptocurrency's price, especially with the addition of the unprecedented demand from the ETFs. According to the ARK Invest CEO, all the factors are properly aligned for a very bullish year for Bitcoin, and by extension, other cryptocurrencies. As we bring you clips from Cathie's interview, please take a little time to give this video a thumbs up, subscribe to the channel, and turn on the notifications bell for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
All of the ETFs out there right now hold about 3.9%, roughly 4% as of today, of all the Bitcoin outstanding. Now, the really interesting thing about that is if you look at on-chain analytics, which our analyst David Puel does for us, you'll see that long-term holders account for, I believe, 15 million of the Bitcoin outstanding, roughly 15 million. Total outstanding right now is 19.5 million. And the total that will ever be outstanding is 21 million. Those long-term holders are not selling. That's what's going on with the price right now. And the flows into the ETFs which have taken the friction out of buying Bitcoin, and which can be used as collateral for loans, whereas Bitcoin itself cannot, suggest to us that that added 1.5 million to go in Bitcoin is going to have to cover a lot of investors, institutions, and so forth. In other words, the price will have to go high enough to rest the supply, some of the supply, out of long-term holder hands. And just to clarify, long-term holders, and again, you can track this on chain, they have not moved their Bitcoin from their wallets in at least 155 days. And when that occurs, the odds that they will move their Bitcoin go down dramatically unless the price spikes dramatically, the halving. So we'll go from roughly 1.9% growth in Bitcoin supply per year down to 0.9%. So we will drop below 1% for the first time. And if you look at the long-term history of gold, very long-term, what you'll find is the average supply growth has been roughly 1%. So now Bitcoin supply growth is dropping below the supply growth of gold. That is a milestone, I would say. And the other difference here is when the gold price spikes, there's usually a mining response and the supply spikes with it. That cannot happen with Bitcoin. So it's quite a different dynamic. So the halving is that milestone. And if you look historically after halvings, it's usually been very good for the Bitcoin price. Now, it doesn't happen right away. I don't know why it doesn't happen right away, but it doesn't. Now that the market's becoming more efficient with ETFs, it might, because think about how many people even know about the halving this time around when they didn't even know what Bitcoin was 4 years ago. They didn't know what it truly was. And if I can just throw one in terms of how we try and describe what this monetary revolution is, and each one of these words is important. The first, global, that's critical. Private, no government oversight. Digital, decentralized, rules-based monetary system in history.
During the interview, Cathie explains that the public's perspective on investing in Bitcoin is quickly changing. She believes the change really started last March, during the regional banking crisis in the United States. According to Cathie, many investors who previously criticized Bitcoin as magic internet money saw it quickly transform into a powerful risk-off asset without counterparty risks, unlike most other asset classes. Cathie believes this moment changed the entire narrative about Bitcoin and prepared investors for the spot Bitcoin ETFs. Despite the rousing success of the ETFs, Cathie says there is more to come. The ARK Invest founder and CEO is gleefully looking forward to when wirehouses associated with big names like Merrill Lynch, Morgan Stanley, and Wells Fargo will begin to offer these spot Bitcoin ETFs. She believes that would be truly game-changing for ARKB, other Bitcoin ETFs, and the underlying crypto asset. Let's get back to the interview as she speaks further about institutional adoption and her $1 million price target for Bitcoin by 2030. Here are more clips from the discussion.
Well, I think something very important happened last year. In March of 23, regional bank crisis here in the United States. Regional banks imploded, some went bankrupt, and Bitcoin exploded. It went from 19,000 to more than 40,000. What did that demonstrate? That demonstrated that Bitcoin does not have counterparty risk like banks do. And so it became a risk-off asset. Before, we had just thought of it as a risk-on asset. When liquidity is flowing, Bitcoin will be one of the prime beneficiaries. But this idea that it is also a risk asset, and as we hope we've shown in our own new asset class paper, white paper, its correlation with other assets is so low that institutions have a fiduciary responsibility from an asset allocation point of view to at least look at it. And if they want to dismiss it, fine. Vanguard did. But what we think that Vanguard is doing is, well, one of two things. Vanguard has never invested in commodities, so it's just treating this like a commodity. For the most part, it hasn't. But we think it's a new asset class, and Vanguard will be depriving its clients of access to a new asset class, which if there continues to be low correlation of returns, what will happen is those using it will see increased returns per unit of risk, and they will outcompete the Vanguard advisors. So, I think there will become, even for the Vanguard ecosystem, a demand pull.
So if you had that bull case for more than 1 million USD Bitcoin, has your forecast timeline to reach that price now shortened?
Yes, that target, what we evolved in, it was before the SEC gave us the green light. And I think that was a major milestone, and it has pulled forward the timeline. One thing I will say, right now, no wirehouse, so whether we're talking about Morgan Stanley or Merrill Lynch, B of A, or UBS or Wells Fargo, no platform has approved Bitcoin yet. So all of this price action has happened before they approve it. And so, we haven't even begun with our new expectations for institutional involvement. The incremental price that we assume for institutions actually has more than doubled. So, I don't want to give out any particular prices, but because we don't know how quickly the more independent registered investment advisors in the United States, those platforms are saying, give us 3 months to do our due diligence. The others are saying we need at least 6 months. So, I would put those in the institutional bucket as well.
In other news, senior Bloomberg ETF analyst Eric Balchunas' latest spot Bitcoin ETFs update is as bullish as ever. In a post on social media platform X on Friday, Eric noted that all spot Bitcoin ETFs were having another impressive trading day. His post reads, "Something is in the water again. The 10 Bitcoin ETFs have seen a big day's worth of volume in the first 2 hours, on pace to beat Tuesday's wild $10 billion day. BlackRock's IBIT alone is $2.2 billion. $1 billion a day is big boy level. IBIT is doing $1 billion an hour." In a follow-up post, Eric added, "Here's a look at the weekly volume for the 10. It has already crushed the record set last week, with $30 billion traded, and probably will add another $6 billion this week when the dust settles at 4 p.m. It's been about 2 months since the ETFs launched on January 11th, yet they are still breaking and setting records. This shows that they are not a passing fad, but are here to stay, and, as Cathie and Saylor have predicted, completely upend all other ETFs and asset classes." What are your thoughts on Cathie Wood's interview? Please drop your comments and observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.